According to a recent Economic Times report, Gaurav Munjal is stepping away from Unacademy, the company that he co-founded nearly a decade ago. And he isn't alone here. His fellow co-founder, Saini, is also reportedly exiting from active responsibilities at the company. Now, before we dive any deeper into the story, though, it's important to note that there's been no official confirmation yet from the company or the founders that this is happening, so do take this information with a grain of salt. Welcome to our weekly Indian Startup News Show. I'm Caleb Friesen, your host, and you're watching Backstage with Millionaires. And before we dive in, this channel is part of the 01 network by Zerodha. Let's get back to Unacademy here. As per these reports, Sumit Jain, a board member at Unacademy, is expected to take over as the CEO. He joined the company in 2020 after Unacademy acquired his startup, Graphy, and insiders are saying that this leadership transition has been in the works for several months, mostly because Gaurav just wasn't interested in running a business built around offline coaching centers. And while these centers now contribute significantly to Unacademy's revenue, sources are saying that Gaurav never really aligned with this direction. His preference has always been for building scalable, product-led, tech-first businesses, and that's where AirLearn comes into the picture, a language learning app being developed under Unacademy's US-based holding entity. Gaurav, along with longtime associate Shashank Murali, are now said to be focusing full-time on scaling this product, and according to Gaurav, AirLearn currently has 70,000 daily active users, a $2 million annualized revenue run rate, and is the fastest-growing product under Unacademy's umbrella. And so this shift comes after a rocky period for Unacademy. In 2024, the company explored a potential acquisition deal that valued it at $800 million, a steep drop from its peak valuation of $3.4 billion. And that deal didn't go through. Around the same time, several senior executives resigned, including the COO, the CFO, and even co-founder Himesh Singh, adding to uncertainty. And so now, while Unacademy has managed to slash its net losses by over 60% in FY24 and significantly reduce its cash burn, overall revenue has declined, raising fresh concerns about the company's long-term direction. Now, so far, neither Gaurav nor Roman have made a public statement, but if these reports turn out to be accurate, then their exit would definitely mark a major turning point for the company, not just for Unacademy, but actually for India's edtech space as a whole, which continues to face intense challenges in the post-pandemic landscape. All right, next up in the news, India has its latest unicorn, and this time it's not fintech, it's not edtech, it's not the AI space. This time it's actually a pet food brand. It's Drools, and they have become India's first pet care startup to hit unicorn status. That's a pretty big deal. Drools crossed the $1 billion valuation mark after Nestle SA, the global food giant, picked up a minority stake in the company. And while Drools hasn't revealed the exact numbers yet, they've confirmed the unicorn milestone, making them the fourth Indian startup to reach this milestone in 2025 after Netradime, JustPay, and Porter. And here's the really interesting part about this story. Drools was started all the way back in 2010 by Fahim Sultan, and even around a decade back, India had just 12.5 million pets, and the pet care market was worth around 800 crore rupees. But fast forward to today, and Drools closed FY24 with 715 crore rupees in revenue, nearly matching the size of the entire market a decade ago. That's incredible growth, and today Drools is a major player in India's pet care space. They offer a wide range of products from high-protein diets to supplements and prescription meals under multiple brands like Pure Pet, Meat Up, Canine Creek, and Kitty Yam. Their portfolio has over 650 SKUs. They're sold in across 40,000 retail outlets in 22 countries. That's pretty massive for a company that most people haven't even heard of until today, especially if you don't own a pet. All right, next up in the news, India's biggest multilingual AI model, Sarvam-M, is finally getting the recognition that it deserves. Just over a week ago, it only had 23 downloads on Hugging Face, and that's when Didi Das, a VC at Menlo Ventures, called it embarrassing, comparing it to a Korean model built by two students that clocked over 200,000 downloads in a month. And his post sparked a wider debate, questioning whether Indian AI builders were solving real problems or just chasing hype and solving problems just for the local Indian ecosystem that may or may not want Indic LLMs. But the story doesn't end there, because fast forward to today and Sarvam-M has crossed 2,300 downloads and it's trending on Hugging Face, and it's actually ahead of that same Korean model that Didi mentioned for this current trending period. And it's not just about downloads. Sridhar Vembu, the founder of Zoho, stepped in to defend Sarvam, saying that none of their own products at Zoho were instant hits either. And according to him, long-term impact matters more than short-term validation. So what is Sarvam-M and why is it worth paying attention to? Built on Mistral Small's 24 billion parameter base, Sarvam-M is fine-tuned for Indian languages and reasoning tasks like math and programming. And it's not just another repackaged model, it's actually showing significant performance gains on Indic benchmarks, math, and even coding tasks. And on some tasks, it's actually outperforming models that are much larger in size. While it did start off slowly, Sarvam-M's team has been focused on technical depth, things like supervised fine-tuning, reward engineering, and inference optimization. And so now it's part of a broader push to create a sovereign AI ecosystem for India. So maybe the initial numbers didn't tell the full story, and if you've tried out Sarvam-M for yourself, we'd love to hear what you think of the model in a comment down below. All right, next up in the news, Aadit Palicha, the co-founder and CEO of Zepto, is calling out what he claims is a targeted smear campaign by a top executive at a rival quick commerce firm. In a LinkedIn post, Aadit accused this unnamed CFO of making calls to Zepto's investors, spreading false allegations without evidence, and even paying bots to push a negative narrative about Zepto on social media. Aadit even suggested that the motivation behind this alleged campaign could be Zepto's improving financial performance, and according to him, Zepto's gross order value has jumped from around 750 crore rupees per month in May of 2024 to 2,400 crore rupees in May of 2025. He also said the company's EBITDA has improved by 20% in just the last 5 months, while their cash burn has dropped by about 65%. Despite operational challenges like, for example, the temporary shutdown of Zepto cafe locations in several cities and ongoing protests by delivery partners in Hyderabad, Aadit insists that the company is on solid ground. He claims that Zepto has over 7,400 crore rupees in net cash and is not looking to shut down stores. In fact, they're ramping up store launches. He also defended Zepto's finance team, calling their audit and compliance record best in class. And he said that the company is just a few percentage points away from operating cash flow break even. Aadit ended his post with a direct message to that unnamed CFO, saying he's okay with strong competition, but not okay with what he calls lies. He urged everybody to stop the distractions and focus on execution. And it's worth noting too that all of this drama is unfolding at a time when Zepto is preparing for a public listing, having recently shifted its domicile from Singapore to India. All right, next up in the news, the government of India has just told e-commerce companies to stop using dark patterns on their platforms. These are things like sneaking extra items into your cart or showing fake only one left messages or making it harder to say no than yes. You've probably seen this on apps like, for example, actually, I won't even name any names. It might get us into trouble. But you've probably seen this before, right? Where something gets added during checkout and you have to remove it manually. The Consumer Affairs Minister has actually had a meeting with top platforms and basically told them, fix this yourselves before we have to step in and fix it for you. He said complaints are going up and these companies should really focus on building trust, not just following the rules. Now, 23 companies, including Zepto, Zomato, Blinkit, Rapido, and Paytm, have agreed to follow the guidelines and clean up their act. People online have already called this out. One Reddit user mentioned specifically Zepto adding a daily pass every time they ordered unless they manually removed it. Others have talked about hidden fees popping up on Blinkit and even accused them of using a bait and switch technique to get them to spend more. But it's not just food delivery. Even Uber and Ola and Rapido are being watched for features like advanced tip prompts before rides. The government says that it's already sent out 400 plus notices over unfair practices, but it looks like nothing has actually been has caused any impact on these companies so far. So that's why they're now starting to crack down and say, listen, you have to make these changes or we're going to do it for you. All right, now some quick news items for you all. Ola Electric has slipped to the 3rd spot in India's electric two-wheeler market, losing ground to legacy players like TVS Motor and Bajaj Auto. The drop comes as Ola struggles with falling registrations, regulatory scrutiny, and internal operational challenges. Next up, Cred users can now sell their cars directly through the app thanks to a new partnership with Cars24 and Spinny. The process includes instant car valuation, free doorstep inspection, and quick payments, all without any paperwork. Okay, now let's move into the funding news segment for today's video. This week, Indian startups raised a total of $181.5 million. It's lower than last week's $225 million. It's also slightly below the trend line, but let's take a look at some of the companies that raised funds this week. The first one I want to talk about here is Gurugram-based value fashion retailer City Cart, which is making affordable, stylish clothing accessible to families in India's smaller towns and cities, and they've raised $63 million in their Series B round. Following that, we have Mumbai-based on-demand home services startup Snabit, and they've raised $19 million. After that, we have online fashion delivery platform Slick, and they deliver your clothes in just 60 minutes. They've raised $10 million in their Series A round. But following that, we have a Bengaluru-based startup called Continue, which uses AI to make construction sites more efficient. So instead of tracking progress manually, construction teams can use Continue's platform to automate data entry and get real-time updates on what's happening on site. And this reduces errors and helps finish projects faster. And they've raised $1.2 million in their seed round. And then finally, we have an Ahmedabad-based space tech startup called Orbit Space, which is building a fuel-free propulsion system for satellites in ultra-low Earth orbit. Their tech lets satellites breathe the thin atmosphere to stay in orbit without having to carry heavy fuel into space, which means longer missions, lower costs, and less space junk as well. And they've raised $1 million in their pre-seed round. All right, that is all the Indian startup news that I have for you all this week. I'm Caleb Friesen, and this has been Backstage with Millionaires. Thanks so much for watching, and I'll catch you in the next one.